Hello traders, today we're going to learn about price action trading strategies. Now as a definition, price action trading strategy is a way that describes the way a market moves, including its trends and key support or resistance levels. Now price action trading strategy is not something so simple like a single indicator or stuff like that. It's more of a combined aspects of different patterns used in trading. Now here we listed some of our major steps in price action trading. Now our first step is to draw some support and resistance lines, or key levels as you can call it. And now as the price always moves in a trend, so we need to draw some trend lines on the chart. Then we need to look for certain candlestick chart patterns that forms up on the key level or on the trend lines. Then we need to look for certain price action chart patterns also, such as head and shoulder patterns or double tops or bottoms. Such kind of patterns forms up on the chart as the price moves on. Then there's also triangle patterns such as ascending triangle, descending triangle, or symmetrical triangle as well. Then comes one of our most important steps, that is about patience. Now we're going to go through the chart and see what these steps are and how to use them in our price action trading. Now in our chart, we already drew the most obvious key levels and other chart patterns in a more descriptive way with pictures to make this video short and help everyone understand it better. Now our first step is to draw some key levels on the chart. Now to do that, first we need to select the horizontal line tool from here and then draw some levels and then adjust them in a way that connects most of the highs and lows of the prices, like these both key levels are doing. So what happens around the key level is that when the key level acts as a support line, then when price comes to touch the key level, then it tends to reverse from the point of touch on the key level. You can see that happening over and over again. Even here, when price acts as a resistance line, then price comes to touch the key level and then reverse from that key level. There's also other times when price do break out of a strong key level, it tends to gain way more momentum and tends to move even further in the direction of a breakout. But before moving up, the price sometimes come to retest the key level, like the one you're seeing here. The price came to retest the key level right here and then went up again with huge bullish momentum. There's also other times when price do seem to break out of a key level, but then again price comes back under the key level and retest the key level as a resistance and go even further down. Those are the points we call as fake outs. Now let's talk about drawing trend line, which is our second step in price action trading. So we need to look for if price is moving in a trend, and if it is moving in a trend, then we need to draw some trend line like this one we just drew right here. So what happens around a trend line is that when price moves in a trend, then it always comes as a pullback to retest the trend line. And after retesting the trend line, the price goes up like this way. The opposite thing happens on a downtrend. So if you look at this retest point on the trend line, then we can see price came back to retest this trend line, which happens to be one of our key levels also. So from this point, we can get two confirmation. The price should go up because it retested the key level, and also price should go up because it retested the trend line. That's how we combine two of the steps in price action trading in one point. After that, we can see when price breaks a trend line, it tends to come back to retest the previous low or all the way up to the broken trend line. And at those retest points, we can get huge momentum for the price to go down. Like in this case, we can see price after retesting this broken trend line went down with huge bearish momentum. Now let's see for some candlestick patterns that forms up on a key level or on the trend line. That's where the candlestick patterns are much more valued. Now in this point, we can see price after breaking the trend line and when retesting, price formed a nice bearish pin bar like this one. And after that, in combination of trend line break and retest and the candlestick pattern of bearish pin bar, price went down. And again, we can see such example again right here. Price retested our key level and then formed bullish engulfing pattern and went up. Again, at this point, we can see price retested our key level and trend line and again formed a bullish engulfing patterns also. So that's how, like from this point, you can get an example like how you can combine both the key levels and trend lines and candlestick patterns, three of the steps in one point of the price, which gives us much more confirmation for the price to react from that point of touch right here. Now let's head back to our other steps, that was price action chart patterns. Now there are different types of chart patterns such as double tops or bottoms, head and shoulders, cup and handle wedges, pennants and flower flags. So let's see some of the price action patterns in here. Let's change this time frame to daily time frame. At this point, we can see price formed a bearish pennant pattern right here. Price was moving in a downtrend, and after that, as price was moving forward, it was making lower highs like this, and then again higher lows like this, shrinking the price in between, forming a bearish pennant pattern like this one. For better understanding, you can see that in picture right here. After price gets shrinked out, then finally when the break happens, it tends to gain momentum and move way further to the direction of the breakout. So we can place our trade on the break of the pennant pattern right here, and then set our stop loss above the previous high right here, and then let the price run. In this case, as the price broke out of the pennant pattern, then we could wait for the retest, and as it did retest the pennant pattern again, we can enter the trade also after the retest. Then price went down with huge bearish momentum. Then we can see another bullish flag pattern forming right here. Price, unlike bullish or bearish pennant pattern, it doesn't shrink the price in between when it comes to bullish flag pattern. You can see price was moving in an uptrend. After that, price was coming down for a pullback while moving in a channel. It wasn't shrinking the price in between, and after the channel was broken, the price came to retest the trend line, downtrend line, and then went up again with huge momentum. So that's a proper example of bullish flag pattern. We can see that also in the picture right here. It's better to place a trade on the retest than to just place a trade on the break, because price always comes for a retest. Most of the time it does. So when you place a trade on the retest, you get better risk to reward trades. Then we can see another example of descending triangle. So the difference in this pattern is that price has a proper support line like this, but it doesn't make a higher lows like the one we saw in pennant pattern. So that's how you call this thing a descending triangle. So the example is the same. If you place a trade right on the break of the descending triangle pattern, then you need to put your stop loss above this previous high, and then let the trade run like this. And here we can see another example of bearish rising wedge like this. Price moved in a downtrend and then shrink the price in between. It's much more like the pennant pattern. The only difference is that price doesn't get shrinked in a ranging trend, but rather in an uptrend like this after a downtrend movement. That's why these are called bearish rising wedge. The price was rising and also shrinking the price in between, and then after the break of the wedge, the price gained momentum and went down even further. And there's another example of symmetrical triangle. It's much more like a pennant pattern that we saw. Now there comes this one of the most popular pattern, that is head and shoulder pattern. You see when price makes a higher high and after that makes a lower high, retesting the same key level like this one, it tends to create a neckline right here. So what you can do is that when you spot such head and shoulder pattern forming up, then you can trade this pattern by replacing a trade on the break of the neckline and setting your stop loss above the previous high like right here, or 180 or above, and let the price run to your take profit. There's also other patterns, that is triple bottoms pattern and double bottoms pattern. So what happens around this pattern is that price tends to retest the same support line one after another consecutively. After that, it gains momentum and moves on the opposite direction like this. We can see other double bottoms pattern right here, another head and shoulder pattern right here. You can see like this, which happens to be on our key levels also. So all the steps and patterns shown in this video are the combined aspects of price action trading. So you can combine all these steps and patterns to add more confirmations on your trades and trade as a price action trader. And once again, we didn't discuss about the patterns and how to trade them individually in a more descriptive way, but we did discuss them individually with each videos on our page. So if you're confused or new to some patterns right here, then you can go ahead and watch our other videos that we did individually on those patterns as well. So we wish you good luck in your trading, and we'll see you on the next video.